Hey, financial future enthusiasts! Welcome back to the channel. Today, we're diving into a crucial topic that affects many of us during tax season. So, grab a seat and let's talk about something you might not be aware of. Now, when you file your tax return and you end up owing money to the IRS, here's the kicker: they charge you 8% interest. Yes, you heard that right. But don't worry, I've got your back. Whether you're expecting a refund or facing a tax bill, understanding the IRS interest is essential. So, grab your tax return, and let's flip to page 2. Right there is where the IRS discloses the interest they're charging you. I mean, who really checks that, right? But now that you know, keep an eye out for it on your tax return. Now, let me share a common scenario. You finish your tax return, you see that sweet tax refund, and you're thrilled. But here's the catch: even with a refund, the IRS can still charge you interest. Most folks don't realize this, and it can significantly reduce your refund without you even knowing it. And what about owing money to the IRS? If that's the case, they add interest to the amount you owe. Sneaky, right? Many people miss this, and it could be a substantial sum. So, pay attention to those details on your tax return. Now, let's talk about a situation where you get a tax refund, but the IRS still hits you with interest. This often happens to gig workers, independent contractors, and self-employed individuals. If you're in that boat, listen up. The IRS wants their money as you earn it. So, if you're self-employed and send in a lump sum at the end of the year, they'll charge you interest because, well, they want their money throughout the year. It's all about those estimated tax payments. As we head into 2024, the interest rate is a hefty 8%, and it's not changing anytime soon. Last year, around 20 million Americans got hit with interest penalties, totaling nearly $2 billion. Now, let's address something that might surprise you. When the IRS owes us money, they don't pay us any interest. Unfair, right? But that's the system for you. So, while we might enjoy a hefty tax refund, we're technically giving the IRS an interest-free loan. The interest rate is influenced by the Federal Reserve. It's currently 8% due to recent increases in interest rates. 2 years ago, it was at 3%. Times change, and so do interest rates. Now, I'll be straight with you. While it's technically better to break even on your taxes, I get it, not everyone can or wants to do that. If you rely on a big tax refund, I won't push you to change your ways. But if you consistently owe money, especially with an 8% interest rate, it's time to reconsider your approach. Believe me, many Americans are unknowingly paying interest to the IRS. Last year alone, approximately 20 million people faced penalties, contributing to that $2 billion figure. So, what can you do? If you're an employee and often owe money, adjust your W-4. Talk to your payroll department or HR, and they can guide you on tweaking your settings. And for my gig workers and self-employed friends, ensure you're making those estimated tax payments throughout the year. Before I wrap up, here's a little-known secret tax loophole for small business owners, especially S corporations. If you miss your estimated tax payment deadlines, here's the trick: send in the full amount through your payroll in December. It might upset the IRS, but it's perfectly legal and can save you on those interest penalties. Remember, knowledge is power when it comes to your finances. If you found this information valuable, give it a thumbs up, subscribe for more tips, and share it with your financial future community. Thanks for tuning in, and until next time, take care.